Connect with Venkat now. Venkat, good morning. Thank you for joining us. I can see you joining us from your new office.
No, I'm in our Delhi office.
See, we track you. We track you. You've changed the location and we know it.
Yes, yes.
Okay. Venkat, if I put the numbers in perspective for our viewers and looking at what brokerages have said, brokerages are of the view that for Titan, it's a okay quarter. It's not like a grand quarter. Perhaps they were expecting a bit more. They are of the view that gold prices and competition has increased, which in a sense was the problem point for Titan for the quarter gone by and could linger along for next couple of quarters. Is that true?
Actually, we have certainly been investing a fair amount in growth. Growth has been our focus and mantra for a while. And yes, the kind of sales growth that the quarter saw and what was announced also a few weeks back, the margin growth, I guess, was not in line with that expectation. We heard it on the call, we saw it in the reports, but we also, shared on the call that our focus continues to remain. And, margin pressure does come because of competition, because of general consumer sentiment, where we have to woo customers to, overcome their reservations in a sense, whether it is gold price or general share of wallet and all that. Yes, there was a lower growth in the margin compared to the sales growth, but we are pretty confident about the coming quarters and the coming year.
So, would you maintain your guidance of the jewelry EBIT margin then, the band of 12 to 13%, which you've earlier highlighted?
That's what Ajoy spoke on the call 2 days back. That's what we would like to deliver.
And where do you see growth coming from? I mean, do you expect that margin will normalize or you will get better pricing power? Because if you're confident of a growth coming back in coming quarters, that means either pricing will come back or demand will come back or both.
Actually, the intrinsic opportunity for the jewelry business of Titan is very, very strong. And I think, post the election, there will be a certain, stable, demand as well. So we're quite confident from a market share opportunity point of view, from a medium term, income class, the Titan company caters to point of view, as well as our own execution. Very, very confident about the sales growth. And we certainly need to manage our margin growth better and more effectively in the coming quarters. And the other thing is, if you look at the full year, as opposed to just the quarter, businesses like watches have done very well. And we need to continue that growth and deliver the margin that comes with the growth. The businesses like eye care in the last few months have really picked up, and we are very bullish on those as well. Taneira continues to do well. International business is doing well. So from a growth side, everything is really, doing well, and we just need to execute to generate the profit growth that is expected from that sales. We're all committed to that, and we will know when the results actually come out, of course.
Sure. So, Venkat, I mean, just because, people always try and make that connect between gold prices and jewelry sales. So do you expect this to be largely just a postponement of demand owing to high gold prices and not lost demand?
See, when the price rises very fast, then there is a lot of worry about, they will wait to buy and all that. But, when it stabilizes, people come back in. It's just that they adjust the number of grams they buy because their budgets are broadly fixed. So if it's a 1 lakh rupee budget, then they buy, 15 grams or 12 grams if the price has risen substantially and things like that. Overall, if you see, historically, the gold price continues to drive demand, and even recent asset class reports place gold pretty high in the overall spectrum of assets, and that gives further confidence to the households on that.
Sure. And what about the studded ratio? Because that has moved a little bit unfavorably. Just wondering what the outlook is, any material changes that you're seeing when it comes to even customer preferences?
So the thing is that we have for a long time, we have never focused on the studded share. We have certainly focused on the growth in the studded category of a decent order upwards of 15 or close to maybe even 20%. But when gold outperforms diamond jewelry because of intrinsic favoring of that, or even overall our market share in opportunity in the gold jewelry business, in the wedding business is much higher because we are predominantly a diamond jewelry brand if you go back in time. And therefore, when gold jewelry sales outdoes diamond jewelry sales, the share drops. But as long as we have achieved our sales targets and sales growth for diamond jewelry, we are not that fussed about the share of diamond jewelry. We are more focused on the sales of diamond jewelry.
Where would you say that your jewelry market share currently is at? For Titan, the longest time the real appeal has been unorganized moving to organized. But what was your unique appeal now seems to be the general narrative by just about everybody in the industry.
That is true. That's because even the notion of organized has significantly changed. I would think there are many independents with one city presence or maybe a part of the state presence who really up their game in terms of product design, store presentation, store experience, and all that. And they can well be called organized in that manner. And they're pretty respectable in their overall operations. So all of them would certainly talk about the formalizing, the organizing of the industry. But all of them together are also accelerating the overall share of the organized to the total. So in a way, the opportunity, our share is still less than 10%, very difficult to exactly estimate, but it may be 8 or 9 or something like that. And in a sense, the opportunity continues to be large because it is still not double digit. But the intensity of competition is much higher, and therefore it's a different game.
Okay.
Sure. I also want to talk about what's happening within the watches or wearables, segment, because I understand that that's seeing some pricing pressure because of excess inventory. How is it that you plan on tackling this, and when do you see this settling?
See, the watch business has done very well, and the Titan brand in particular has done exceedingly well in very intense competitive places like even the department stores, online and all that. The Titan brand is powering the growth of the watches business. So the analog watch business is actually in a very, very good position. We just need to extract value through operational effectiveness, which we're all committed to doing, and you'll see it in FY25. The smart wearables business is different. We were a late entrant. We have now become a prominent name. We have a decent share. But it's also a little bit of a polarized market with global brands right at the top and a huge gap. And then you have a lot of activity below 5,000 rupees kind of thing, which has been like a commodity market. So we've come in with better quality, better features and styling and all that. And it's certainly taken us a little longer because we came in late. But through a more differentiated value proposition and overall, customer experience, we expect to, get a better grip on both sales growth as well as margin control through this year and in next.
And what do you believe will be the outlook when it comes to the store addition plan? Will growth largely be driven by that? Can you give us a sense as well in terms of how the market share is shaping up?
You're talking about the watch business in particular?
Yes, and overall.
Actually, our store expansion ambition continues to be very, very strong across all businesses, whether it is Tanishq outside India or Taneira in India, Tanishq in small towns, big cities, Mia, Carrot Lane, Titan World, Helios, I+, the opportunity is very strong everywhere, and we are pushing the numbers. There is no let up in the expansion at all, I would say.
What would you prioritize in the near term, growth or a margin? Because when things are changing and competition is increasing, you'll have to choose one.
No, we have actually been focusing more growth than margin, honestly, because if you look at the intrinsic profitability, return on capital profile of Titan Company, they're very, very good. And therefore, they give us a little bit of breathing space to focus on growth and not worry about margin so much because of the strong financial position we are in. And while the near-term opportunity in India is very strong, we're talking about very good growth in the top two income classes of this country, which cater to Titan's businesses, but that's near term. But as we speak, in a particular month or a quarter, both owing to share of wallet reasons, consumer sentiment reasons, as well as competitive intensity in a particular category, margins do come under pressure, but we become stronger in sales and share and customer acquisition so that the margin can be actually created a little down the road. So sales growth is certainly the focus.
Right. Lastly, Venkat, we understand that your term's getting over in December 25. Assume that you're looking at a reappointment or not?
No comments really on that. It is, people have to retire and go, so my time is that. The rest of it we will know as things unfold.
So, Venkat, if I summarize our today's interaction, let me just summarize it. Point number one, yes, the quarter gone by was tough because of competitive intensity. But the management of Titan is confident in the jewelry business margins would be in early teens. You're also confident that the demand, which in a sense was low, will come back. And in the near term, the company will continue to prioritize on growth rather than margins, which means that unlike what we've seen in the previous good cycles for Titan, where margins were north of 15%, they may struggle to get back there.
When was it north of 15%?
No, I'm looking at EBIT, 14.5%, that kind of end margin.
That must have been quite some time back at a different scale also.
Yeah. I'm saying once upon a time.
One refinement, actually the sales, the demand side has been very good. One of the points that you said was about demand. The demand side has been, the whole of last year was, Titan standalone was about 19% growth, and consolidated was more than 20% growth. So the demand side is very, very strong, and we are confident that it will continue to be strong, and we will focus on that demand and extract value more than what we have done in the past.
Appreciate your time and so glad you could join us.
Thank you. Bye-bye.
If you like this video, then like, share and subscribe to ET Now.